If you sell on Etsy, 2026 brings a major tax change that could catch you off guard. The IRS reporting threshold just dropped to $600, which means millions more sellers will receive a 1099-K this year. But here's what most people don't realize. This doesn't mean you owe more taxes. It just means more of your income is being reported. In this video, I'll break down exactly how Etsy taxes work in 2026, what this new threshold means for you, and the deductions that can save you thousands. Let's get into it. First, let's talk about this new reporting rule. Before 2024, Etsy only sent a 1099 if you earned over $20,000 and had more than 200 transactions. That was a high bar, and most casual sellers never got one. But the IRS has been lowering this threshold. In 2025, it dropped to $5,000. And now in 2026, it's just $600 with no transaction minimum. If you made $600 or more on Etsy in 2025, you'll receive a 1099-K form in January 2026. Here's the important part. This doesn't change how much tax you owe. You were always supposed to report your Etsy income, even without a 1099. The difference now is that the IRS will know exactly how much you earned because Etsy is telling them. Now let's talk about what you actually owe. As an Etsy seller, you're considered self-employed. That means you're responsible for two main taxes. First is self-employment tax, which is 15.3% of your net profit. This covers Social Security at 12.4% and Medicare at 2.9%. Unlike a regular job where your employer pays half, you pay the full amount yourself. Second is federal income tax, which varies based on your total income and tax bracket. And depending on your state, you may owe state income tax too. Here's a simple rule. Set aside 25 to 30% of your net Etsy profit for taxes. This gives you a safe buffer to cover everything. Don't spend all your Etsy earnings without setting aside money for taxes first. If you expect to owe more than $1,000 in taxes for the year, you need to make quarterly estimated tax payments. For 2026, the deadlines are April 15th, June 15th, September 15th, and January 15th of 2027. Missing these can result in penalties. Now here's where Etsy sellers often get confused. There's a big difference between your gross sales and your taxable profit. Your 1099-K shows gross sales, which is the total amount customers paid. But that's not what you owe taxes on. You only pay taxes on your net profit, which is gross sales minus all your business expenses. Let me give you an example. Say your 1099-K shows $15,000 in gross sales. But you spent $4,000 on materials, $2,000 on Etsy fees, and $1,000 on shipping supplies. Your actual taxable profit is only $8,000. That's a huge difference. This is why tracking your expenses is absolutely critical. Without records, you can't prove your deductions, and you'll end up paying taxes on your gross sales instead of your actual profit. Let's go through the main deductions Etsy sellers can claim. First and biggest for most sellers is cost of goods sold. This includes all the materials and supplies that go directly into your products. Fabric, yarn, beads, wood, paint, packaging materials. Everything you use to create what you sell is deductible. Second is Etsy fees. Etsy charges listing fees, transaction fees, payment processing fees, and advertising fees. These add up fast and are 100% deductible. You can find a breakdown in your Etsy payment account. Third is shipping costs. Postage, boxes, mailers, tape, labels, and any shipping supplies you purchase are fully deductible. If you buy shipping through Etsy, this is already tracked for you. Fourth is your home office. If you have a dedicated space in your home that you use exclusively for your Etsy business, you can claim the home office deduction. This can be calculated using the simplified method at $5 per square foot, up to 300 square feet. Fifth is equipment and tools. Your computer, printer, camera for product photos, craft tools, and any equipment used for your business. If it costs over $2,500, you may need to depreciate it over time, but smaller purchases can be deducted immediately. Sixth is software and subscriptions. Canva for graphics, accounting software, inventory management tools, even a portion of your internet bill if you use it for business. Seventh is education and training. Online courses, books, and workshops related to improving your craft or business skills are deductible. And don't forget, you can deduct half of your self-employment tax on your income tax return. This is an above-the-line deduction that reduces your adjusted gross income. Now let's talk about something that confuses a lot of Etsy sellers: sales tax. Here's the good news. In most states, you don't have to worry about it. Etsy is considered a marketplace facilitator, which means they're legally required to collect and remit sales tax on your behalf in most states. You don't charge it, you don't collect it, you don't pay it. Etsy handles the whole thing. However, there are a few states where this doesn't apply, so check your specific state's rules. And if you sell outside of Etsy, like at craft fairs or through your own website, you may need to handle sales tax yourself. When it's time to file, here are the forms you'll need. Schedule C is where you report your Etsy income and deduct all your business expenses. Your net profit flows to your main tax return. Schedule SE calculates your self-employment tax based on your Schedule C profit. And Form 1040 is your main individual tax return. Let me walk you through a real example. Say you had $20,000 in gross Etsy sales. Your expenses include $6,000 for materials, $2,500 for Etsy and payment fees, $1,500 for shipping, $500 for your home office, and $500 for equipment and software. That's $11,000 in total deductions. Your taxable profit is $9,000. At the 15.3% self-employment tax rate, you'd owe about $1,277 in self-employment tax, plus income tax based on your bracket. But if you didn't track expenses and paid taxes on the full $20,000, you'd owe $3,160 in self-employment tax alone. That's a difference of nearly $1,700 just in self-employment tax. Here's your action plan. Start tracking every business expense today. Use accounting software or a simple spreadsheet. Keep receipts and records of all purchases. Calculate your estimated taxes quarterly. And if this feels overwhelming, consider working with a tax professional who understands e-commerce businesses. One more thing. If you're wondering whether your Etsy shop is a business or a hobby, here's the general rule. If you're trying to make a profit, it's a business. The IRS looks at factors like whether you depend on the income, whether you're trying to grow, and whether you've made a profit in 3 of the last 5 years. If it's a hobby, you still report the income, but you can't deduct expenses. So if you're running a real shop with the intention to profit, make sure you're treating it like a business. Note: this information applies to US-based Etsy sellers. Tax laws vary by country, so international sellers should consult local tax authorities. If this was helpful, subscribe for more small business tax tips. I cover taxes for freelancers, gig workers, and online sellers. Drop a comment if you have questions, and I'll see you in the next one.